the United States and China are locked in a trade war. This conflict has been simmering for years. It has now escalated dramatically. At the heart of the dispute is a massive trade imbalance. The US imports far more from China than it exports. This has led to a significant trade deficit for the US. President Trump argues that this trade imbalance is unfair to American businesses and workers. He believes that China engages in unfair trade practices. These practices include intellectual property theft and forced technology transfer. To address these concerns, the US has imposed tariffs on billions of dollars worth of Chinese goods. These tariffs are essentially taxes on imported goods. They make Chinese products more expensive for American consumers. The goal is to encourage Americans to buy American-made products instead. The Trump administration hopes this will pressure China to change its trade practices. China has not backed down in the face of American pressure. Instead, it has responded with its own tariffs on US goods. These retaliatory tariffs target key American exports like agricultural products and automobiles. This tit-for-tat exchange of tariffs has escalated the trade war significantly. The situation is further complicated by China's currency manipulation. China has allowed its currency, the yuan, to weaken against the US dollar. This makes Chinese exports even cheaper for American buyers. This move effectively offsets the impact of some American tariffs. The trade war between the world's two largest economies has sent shockwaves through global markets. The uncertainty surrounding the conflict has made businesses and investors nervous. Stock markets around the world have experienced significant volatility. Some fear that the trade war could escalate further. This could lead to a global economic slowdown. The trade war is already having a real-world impact. American farmers, for example, are struggling to sell their products as Chinese buyers seek alternative sources. Chinese manufacturers are also feeling the pinch as American tariffs cut into their profits. The US-China trade war highlights the deep economic interconnectedness of the two countries. For decades, American businesses have invested heavily in China. They've built factories and established complex supply chains. Chinese companies have also invested heavily in the US, buying American companies and real estate. This economic interdependence makes the trade war even more dangerous. Both sides have much to lose if the conflict spirals out of control. A protracted trade war could damage both economies and have ripple effects throughout the global economy.